has been correlated closely with gold throughout time, and these correlations broke down in the beginning of this year or the end of last year, kind of like 2019. Silver was a easy buy. Like, it was something that without a doubt, when this correlation broke down, it was just an absolute no-brainer buy. And the recent testimonials that we've shared, and the testimonial on YouTube of somebody making $140,000 on a $40,000 account, that was all because of the silver trade. And that's this video here that I will share in the chat. And this video talks about, you know, how one of the clients was able to make 140 grand on the silver trade. Okay, so I'm just going to share that in the chat. Now, the reason that it was such a no-brainer trade is because these lost correlation, and then silver went parabolic to catch up to gold. Derek, please watch the video. I know it's your first day, Derek. Let me explain something. Whatever you do for a living, and I'm not just talking to Derek, anybody, whatever you do, it's going to take time for me to learn what you do. If you're an attorney, I'm not going to learn to be an attorney in one day. I've been trading since '97. It takes a while. This will not be learned in one day. If you think this can be learned in one day or 3 days, it's not going to be. Absolutely no way. So that's what the silver market did. Now, the reason that platinum and palladium are on the platinum and copper are on the week aheads is because platinum, I'm going to use purple, again, trades along with these, but platinum is relatively cheap to the other metals. Copper as well is relatively cheap to the other metals. So we like being long copper, we like being long platinum, and we like being long those because of the correlation to the other instrument. That's it. It's nothing more complicated than that. The next lesson, though, is managing money. How do you get in? How do you get out? So the levels that Pablo is sharing, or the levels that I share, are we're just looking for ways for people to get involved. We ladder into trades. I think it's best to ladder in 3 different tranches. Throughout my career, I think that's been the most effective, but it's also a way that we can kind of easily explain it to everybody. 3 tranches, ladder in. But it gives you confidence because we also know that we're getting into a trade because the correlated instruments are way up here, okay? That's how the trade works. The same exact thing could be said if we then look to the energy market, and we look to the energy markets. In the energy markets, you know, you can analyze, you know, oil, right? But then you could analyze different kinds of oil. You'll have WTI and you'll have Brent. Think of this as US oil found in Texas. Brent is oil found in the North Sea, more classified as like a European oil. These are going to be closely correlated. Again, WTI and Brent are closely correlated. The difference in price ranges from storage to the cost of transportation to how easy it is to get. The US oil needs to be transported by rail. The European oil needs to be transported by sea. It's a lot more efficient to transport oil by sea. The components of oil that you can crack from oil are going to be heating oil, gas, and that's what makes up what's called the crack spread. The crack spread is what's going to make RBOB, heating oil, CL, BZ. The crack spread is what's going to make these 4 components closely correlated. So when those close correlations break down, traders might see an opportunity to make a trade. The reason where Pablo shared on the spreadsheet the heating oil trade is because those relationships have broken down. And the Edge series allows us to see that a lot more clearly, okay? Does anybody have any questions up until now? How are we doing? Is this better? Are we moving more efficiently? You guys could hear me okay? Talk to me. I got 40 people on here. Can you give me a why that you're okay? Good. Awesome. Good, good, good. Please, and ask whatever questions you have. Okay, I'll keep going. Steer me in a little bit of a different direction if you want. Michael, sure. Here, let me. So 3 tranches to enter and exit trades. I'm kind of always using that. I'm using that in options and stocks and futures. If you think about 2 correlated instruments, okay, and these 2 correlated instruments can be anything. You know, it could be gold, silver, it could be 5-year bonds, 10-year bonds, it could be, I'll show you exactly what I was looking at before. Literally, while Pablo was presenting, I was looking at the hog crush and the reverse hog crush. Lean hogs against corn futures against soybean meal, okay? There's so many different spreads. And this is a spread that we don't really teach, but it's something I've traded in the past, and I was just playing around with it. And I'm happy to share this white paper in the chat, but I'm looking at this shit all day looking for different relationships. Now, why would the hog market be related to the corn market? Hogs, corn, soybeans, corn. Okay, feeder cattle, live cattle. Hogs eat corn, yeah. It's all tied together. So once you find correlated instruments like this that break down like this, there might be an opportunity to buy one and sell the other. Now, you don't have to do a spread trade. We are not robots. We are not robots. So the red line, if you're bullish that red line, that doesn't mean you have to sell the black line. My overall thesis, especially for newer traders, and Derek, newer trader with a lot of questions, I love that. I really, really wish you'd come in maybe just a little more patience perhaps. But the red line, if you want to get long because of this chart right here, what I want is, if the market looks like this and you're a technician, you've always been using technical analysis, stop using so much technical analysis and use this kind of analysis for confidence. You don't need technical analysis. What you need is to find a reason why something should go up or why something should go down. Right now, there's a key reason of why we want to be long copper, why we want to be long platinum, why heating oil is inexpensive relative to natural gas. There are many different ways to express the same exact opinion. If we are bullish copper, I can express that opinion in thousands of different ways. Why we need to learn options and why we need to learn relative value analysis is just because you could express something in thousands of different ways, there are more efficient ways to express things rather than using less efficient ways. And that's where I believe that we could really add value. Now, my Thinkorswim is working and it might work for the next 3 seconds, so I'm going to take advantage of it while it's working, because using edge light, which is what's right in front of you, and this edge light has about a week remaining. If I wanted to upgrade, I would just email myself. And these different spreads are using all the mini contracts or micro contracts or whatever they're called, because we want to be able to learn without risking a whole bunch of money. Right now, according to this, if you could perhaps buy the green line while simultaneously selling the maroon line or red line, I personally think that there's a high probability of success in that trade.